So make sure we all fill the attendance list. It's on the chat box. And today, okay, let me give you a brief intro on who we are if you're new here, if you're just joining us for the very first time. This is Transformation College of Business and Technology. Transformation College is a college that is ISO 9001 and ISO 21001 certified college that offers diploma and certificate programs to SSC students, NYC members, university graduates, and professionals in other fields of studies to wish we wish to diversify their skill sets and knowledge within Nigeria and beyond. Our courses are sure to provide our students with practical knowledge or know-how and experts choose their courses. So our courses include Diploma in Entrepreneurship and Business Management, which is also known as EBM, Diploma in Information System, which is so you can also see here that we have the attendance list for today, and right about now, I'll be calling on Mr. Emmanuel to introduce our trainer for today.
All right, thank you, Adedamola. It's nice to have everybody here today. My name is Emmanuel, and I am the IT coordinator for Transformation College. Please, can you all hear me? If you can hear me, can you chat in the chat box, please? If I'm audible enough, you can
Yes,
unmute
yes,
or
you're
tap.
audible, Mr.
All right,
Emmanuel.
thank you so much. Can I go ahead to share my screen, please?
Yes.
Okay. Um, so before, okay, let me share my screen. Let me share my screen. All right. I guess my screen is audible right now. Before we go into what we have today, um, our courses, I'll go back to our courses. Adedamola mentioned them briefly, but I'd like to reiterate. So we have the Diploma in Entrepreneurship and Business Management. We have Diploma in Information Systems, and um, we have a certified AI and business analyst. We have the certified AI and automation specialist. So these are the programs that we have running for 2026. Right about now, I'll have my colleagues share the link to the registrations. If you have not registered for any of this program, these are really insightful programs. These are not just programs where you just read. These are practicals. You're going to go through practicals. You're going to have hands-on experiences on all of these programs. So if you're yet to register, please go ahead to register as the links will be posted in the chat box right about now. My colleague TT, please can you post the links? Let everybody go to register. And also do not forget to fill the attendance form for the program today. It's going to be a really insightful one. Why we are actually having this is to let our new intakes, although we have some that have been with us for a while. Robots was with us throughout last year. Robots, are you still on the call? Okay, yes, Robots was with us all through last year, and this year is a different one, and I'm sure he's taking some of these new insightful programs. Okay, before we go ahead, Robert, can you take a minute to okay, please give me a minute, everyone. All right, so I've been told to put my camera on. Thank you so much, everybody. So, before we go ahead to today's business, we have a guest speaker here. But for the sake of those joining us for the first time, Realbot, can you go ahead to unmute your mic and tell us briefly how Transformation College has been for you all through last year, please? Just briefly.
Good morning, everyone.
Good morning.
I am an alumnus of Transformation College where I learned AI and machine learning last year. I was certified last year, and in fact, is an experience that no one should miss. All thanks to Transformation College.
All right, thank you so much, Robert. It's our pleasure to have you. And also, I'm taking this moment, I'm seizing this moment to actually tell everybody on this call, tell your family members, tell your brothers, tell your sisters, your cousins, your enemies, even let them take courses from Transformation College. When you tell your enemies about Transformation College, they won't have time to actually um, you know the way we all say it. So that's just by the way. So please tell everybody about Transformation College. Tell your family, tell your friends, tell your cousins. Let them come. Let them register for all of these programs. They are going to be really insights for this year. So we'll be going through to what we have today. Yes, we have the 2026 Readiness virtual webinar, the tax awareness and the career tips. So we have our trainer, our guest speaker, Uyemaka Prince Chinozu. Um, I hope I got the pronunciation right. When it comes up, he's going to correct me. So we have his MBA, MSc, FDA, FIMC, ACA, AICA, AP, AM, CMS certified. Wow, that's a lot. So this is just to show us how far we have gone to bring this person to actually train us, to actually enlighten us on all of these tax rules and also in career pivoting or choosing a career. I know we have graduates, we have students, we have professionals even on this call. So he's going to be taking us through. Let me give us a brief introduction of our speaker today. Mr. Prince holds a master's degree in business administration and a second master's in management and entrepreneurship studies. He is also a graduate of accounting with an upper credits level in higher national diploma HND. However, he's currently pursuing his PhD program in management and entrepreneurship studies at the final level. Mr. Prince is a fellow member of the Institute of Management Consultants, IMC, a fellow member of the Chartered Institute of Development Studies and Administration of Nigeria, CID-SAN, an associate member of the Institute of Chartered Accountants Nigeria, ICANN, an associate member of the National Institute of Credit Administration and NICA Chartered, a certified management consultant from the UK, London, a certified Zero accounting software advisor from Illinois, United States of America, and also a certified Zoho accounting software partner. So this is just to tell us that today you're going to get your minds ready, you have to get your pens ready, you have to pick. You should be ready to pick one or two from today's session. We have gone so much to bring a seasoned individual, a seasoned I call him certified individual, yes, for today's session. So please let me finish up Mr. Prince introduction and please let us prepare our minds, prepare our pen, prepare our soul for this session. Also, Mr. Prince has a well over 15 years of practical accounting, audit, tax, and management consultancy experience in an audit, tax, and consultancy firm. Aside other sectors of the economy, he has worked for, e.g., a stockbroking firm, manufacturing company, etc. He has led and participated in a minimum of 20 audits, tax and management consultancy services ranging from oil and gas production and various servicing companies, manufacturing, logistics, insurance, media services, and real estate companies, including LNPC Limited subsidiaries, etc. He is a consultant or manager in an audit and consulting firm located in Lagos State, Nigeria. So please please, while we are listening, while we are picking our points, you can also jot down questions for our seasoned speaker. Without further ado, without wasting too much of our time, I'll be giving Mr. Prince the room to take over. Mr. Prince, are you there with us? Mr. Prince, can you hear me? Hello, Mr. Prince. Okay, maybe he has some network issues, but I'm sure he's going to be joining us. Mr. Prince.
Hello, hello, can you hear me?
Yes, I
Hello,
can
can you
hear
hear me?
you, Mr. Prince.
Sorry for a little glitch as network
Yes, I
at
think
my end.
Manos is going through a network issue also because I can't hear him also right now.
Yeah, thank you very much. Thank you, Adedamola, and thank you once more for bringing me to this session. Yeah, my name still remains Onyemaka Prince Chinoso, as rightly explained the brief of the profile. Without taking much of our time, I think we will need to be going into the presentation of today. Yeah, can you permit me to share my screen?
Oh, yes, sir, you're good to go. And please, can you be a bit more audible, sir?
Okay. Wait. Can you see my screen? Can you see my screen?
Not yet, sir.
Oh, not yet. Not
No,
yet, sir.
sir. No, sir.
Okay. Don't let me know when you can see it.
All right. Yes, you are clear. We can see your screen now, sir.
Oh, okay. Thank you very much for this wonderful opportunity and time. So we'll be looking at tax in the various ways, though it might not be, because actually tax is a very robust aspect of this discourse, but we are trying to like dive into the emergence of the new tax act that was just signed in, and also have comments is implementation date mandate from the dates of January 1 this year. So we are trying to like have the understanding of the new Nigerian Tax Act. Let us look at the key changes, the implication, the compliance strategy, what aspects is it affecting an individual, what aspect is it going to affect, or is it going to affect a company, whether small, medium, or large companies. So our key focus was to have an overview of the new tax acts, taking the understanding on the meaning, the evolution of tax reforms systems in Nigeria. Then we look at the purpose for tax reform. What are the key changes with the new Nigerian Tax Acts, the implication of the new tax acts, compliance strategy, we look at the impacts in the individual, then benefits, then consequences of non-compliance of these tax acts, because that's one of the key areas that one who may claim that is not aware or claim that is ignorance of the acts, of which we all know that there is no ignorance that is supported or backed up by law. But once you default, once you fall a victim, the law takes its course. So what are those things we need to have at our own end as the take home that will be able to propel us to be complying to the new Tax Act? So all those things we'll look into. So in view of having generally what Tax Act is, We know in the contemporary world of today, we can attest to the fact that changes is quite dynamic. Likewise, reform itself is dynamic, whether in the area of taxation, whether in the area of fiscal policy, monetary policy, banking aspects, whichever, including education and telecommunication. We can remember what happened at the emergence of GSM, the network that we had presently now. When it came in newly to Nigeria, we could actually understand the transformation that came through while that existed in Nigeria, and as of today, something that we are now enjoying freely, and we cannot just do away with telecommunication as it is now. So that is the what a reform can bring about. That's what a new normal, like we had that maxim after the events of COVID, a new normal. So as the task art is also coming into place, we are now seeing it as our new normal. The old things we are doing before may no longer be applicable or may no longer be feasible to go by as it is at the present time. So what are we looking at when we are saying tax reform, tax art? We are trying to like have the understanding and they have the mindset, the collective of the power that people accept the reform and with a forward-looking and objective mindset. I know whatever time or changes that comes in any aspect, it's not easy for someone as an individual to take it in wholesome. There will be a lot of kickback and a lot of lack of understanding and lack of awareness, even what we are even experiencing present, even in our Nigerian Senate and rep houses, a lot of kickback against the new tax act. But all the same, the tax act in general terms is looking at a way to better the economy, the way to better individuals, a way to better the business at large, and also, bring in foreign investors to to Nigeria as a whole. So these are some of the key things we should be able to have at the breast of our mind in looking at what tax act is all about. So looking at a little bit drawback on how taxes that have existed period before today, because our taxation in Nigeria started as long far back at 1917, period before the emergence of independence. You look at it from perspective of colonial government. Before that time, there are other taxes and ordinances that existed, which we call Native Revenue Ordinance Act, followed by Taxation Ordinance of 1940. Consistent reforms have come into place down to the point after our independence. The first reform that came up was at 1978. That brought about the reform of all income we earn, to try to harmonize it. In addition, introducing what we call today withholding tax. That is back when that happened. So after a while, getting to 1993, another reform occurred. That reform now brought about the what we call today value added tax, which is VAT. It happened as far back as at 1993, which was addition to what was initially had in between 1978 to 1993, within around 1986. That when we first had the Sales Act that propelled the VAT Act that was reformed in 1993. Going further, we had the National Tax Policy Review that occurred in 2017. Subsequent to that effect, it also led us to Finance Act of 2020, which was for a thing that has been in existence before the emergence of the present government, which now look at all these things and said, no, let us have a way forward. Let us have a unique tax system. Let us have a system that recognizes a global reform a global partnership, a global business collaboration. And in looking at that, a committee was set up by the president, which was called Presidential Financial Fiscal Policy and Tax Reform. So the key area or key thing that we are looking at to to do is to, like, first of all, review and redesign the Nigerian fiscal system, harmonizing all collectible levies and taxes across board, harmonizing all the multiple taxes within the Nigerian tax system, unifying revenue collection functions and mechanism, engaging in the harmonization of the collective tax system. So before this era, we have what we call a multiple tax system, whereby various agencies in Nigeria, we are given a room to charge a levy or a fee, which is in general terms called taxes, to irrespective agencies. And after that, you also have the one previously Federal Inland Revenue Services was also handling. So looking at all those areas, all those things that were occurring at that time, the new tax reform that was set up, the committee that was set up, now was given this mandate and focus to be able to see a way to harmonize these taxes and have a collective and a uniform system whereby an individual or an entity, a company per se, should be able to be subjected to tax based on his own revenue, not just using one revenue to pay taxes for various agencies. So that wasn't a fair one. But because of also the mechanism that was on ground, that we are so weak, the system of collecting it was so weak, so people can go by to do whatever they want, have a way to avoid taxes and exempt themselves from paying taxes. So the focus on the committee was given to redirect all this and harmonize these taxes, so that at the end of the day, the government itself will take charge of their revenue. So the bottom line at that point is to see how to, first of all, bring in all these taxes, the ones that are not necessary, that we are repelled. So that was the focus. So the emergence of the new tax now, the committee looked at it and brought out these four major acts focus. One we call Nigerian Tax Act, which provides a unified fiscal legislation governing taxation in Nigeria. So this and the emergence of this NTA repel about 12 legislations and amended about 15 other legislations. These are the legislation that we are granted to most of the agencies to be able to also do tax collection. But so with this emergence of these new tax acts, about 12 of them was pulled down. Then 15 others were amended to be able to have a common view and a common purpose of tax collection. So the next act that also came on board was the Nigerian Tax Administration Act. Believe you me that the period before now, the Federal Inland Revenue Service do not have adequate and enhanced administrative acts that was backing the way upon which they administer taxes. The powers were limited. So, but the emergence of this new act now expanded the way upon which they can provide assessment. They can also give collection and also give account of all the taxes that are being collected, remitted to, accruing to the federal, to the state, to local government, authorities. So that was one of the key things that the act also brought in. Then we have Joint Revenue Board Act. Before now, we used to have Joint Tax Board, and that Joint Tax Board, because also the act also then was also weak. That was what even gave rise that all states started having their own uniformed tax system to be able to see, okay, how do I administer my tax system in my state and all that. So, but the emergence of this reviewed or new board now gave rise to creation of tax tribunal and tax ombudsman to protect taxpayers' interests and facilitate dispute resolution. So the next other one, which is another key area, is Nigerian Revenue Service Act. It repealed the Federal Revenue Act of number 13, 2007, then established the Federal Tax Authority, which is now called Nigerian Revenue Service. So they are to account for all revenue accruing to federal government of Nigeria. So that is the things that the four major acts that the committee came up with and has also been passed to law, which took effect from 1st of January 2026. So the key objective of the reforms was to step up the tax administration procedure, was to boost the revenue base for the government, to also remove outdated laws and enact new ones that will be, in tune with current realities and development. Then he looked into the aspect of economic and social benefits for general masses and populace. They also look at to facilitate simpler, fair, and fairer tax system. Some of these are felt in the aspects of the individual and also in aspects of small businesses, medium and large scale businesses. As we proceed, we're able to touch base on some of these aspects that that was also affected. So key highlights on the area of change. In terms of harmonization of the tax laws, that was achieved. In terms of agency harmonization, where we have the custom, the various other agencies of the government having their own independent tax collections and fee levies and all that, with the emergence of this act, brought about the harmonization of that, which is now presently managed by the Nigerian Revenue Service. So the another key area of change was to digitalize the process. Prior before now, I think 2 or 3 years backward, that came up, tax office came up with what we call Tax Pro Max. So Tax Pro Max was actually a system whereby companies, whether small, medium, and large, pass through their filing of their system of their the operations for the year into both on monthly basis as regards to VAT and also on annual basis as regards to filing of their accounts. So, but now the review that came up upon this tax promise was to do a live digital process whereby your revenue sources are being tracked through the tax Nigerian Revenue Service. Wherein you have e-service, e-revenue, e-collection service, whereby for now the focus is at the large companies. The purpose for which they are doing what they are doing is that for any business you are doing, you should be able to pass your invoice to your customer through a unique system that tax office Nigerian Revenue Service have come up with. And key purpose of this is that for international relationships, for foreign partners, for them to have more confidence in dealing with these businesses in Nigeria, they should be able to have a base that can be verified, that can be attested to, and the key people or key entity that should be able to attest to that, for which foreign partners can leverage and take a decision, lies on Nigerian Revenue Services. So they created this e-servicing portal whereby when all their invoices are passed through that system, it gets a unique code and a stamp of Nigerian Tax Authority on that, so that while you are sending your invoice to a foreign partners for any business purposes, they can use that to have a confidence to do business with such companies in Nigeria. But for now, that e-platform is left at the large companies for now. But in subsequent years, the idea is that subsequent years, it will gradually trickle down to the medium scale businesses and finally to the small scale businesses. So that is the key reform that came about on the digitalization process. They're centralizing access to physical data. A period before now, data are located in various task stations. But with the emergence of this digitalization process, all task data relating to any company or relating to any individual is now going to manage and warehouse by a one entity, which is Nigerian Revenue Service, as a central data bus. That at any point in time, if any entity, any individual wants to make a reference to his task history, once you get use your task ID to be able to log in, be able to see all those things across board, whether in Nigeria or outside Nigeria. That is one of the key things that centralization of this physical data came up with. So some other reforms or key areas of change was aspect of VAT, company income tax, capital gain tax, personal income tax, and all down to these other ones. So key implications to Nigerian Tax Act looks as to stimulate economic growth, to promote a competitive Nigerian business environment at a long run, to enhance a simplified compliance platform, to also facilitate a level playing ground for businesses to thrive. You believe you me that if company A and B in existence, company A is actually complying to tax reforms or tax practices before this time, and company B in all aspects are not complying 100%. So it's tendency that company B will be paying a lower tax against a company A that is complying fully with 100% tax. At the end of the day, assuming the revenue of these two companies is at the level of 100,000 naira, company A is complying fully and is paying a tax total of 30,000 naira, while company B, who is not complying fully, is paying a tax of 10,000 naira. Automatically, company A will be having a profit margin of 70%, while company B, who is not complying fully, will be having a profit of 90%. So looking at those two businesses, you will see that company B on the periphery, you will see that company B, who is not complying fully, will be having much revenue to his coffers, much profit to his coffers, and rejoicing home. But he's not complying. But the emergence of this news act now brought to that parity. These two companies, let them have a fair playing ground, pay the necessary tax they need to pay, and see their bottom line. And at that point, assess themselves, their performance-wise, whether they are doing well into the business or not. So these are some of the key changes that this tax act will brings about. So it lowers also the tax burden for individuals and also for businesses. As we proceed, we'll point out some areas that brings about the lowering of tax burdens. For individuals, how does it impact individuals? This tax act, how does it impact individuals? Looking at the exemptions to low-income earners. Presently, the new tax act is saying if you are earning maximum of 800,000 naira as an individual per annum, which is on monthly basis, you are looking at 67,000 naira per month. Automatically, you are exempted from paying tax. You are exempted from paying tax. Then that brings about reduction of payee tax for individuals earning a monthly salary of 1.7 million and below. At the point we are earning 1.7 million in a month, in a year rather, when you look at it over time with the old tax and the new tax, you'll see that the new tax at the moment is bringing about a reduction in the tax you have to pay and also an increase in your take home. at the practical station, we'll run through this, will show us how this applies. Then the impact also to individuals is to lower income earners to enjoy tax break and holiday for wages, award, and transport subsidy. Period before now, transport and the awards are also not, considered as tax exempt. But with emergence of this tax act, now brings about there is a tax exempt for whomever that is on the wage ladder and also having a transport subsidy. Then the rent below 10 million to enjoy exemption from stamp duty. Period before now, whatever rent you are paying, you are going to be paying stamp duty automatically. But now the rent you are paying, whether for your businesses or for individual, there is totally exemption of stamp duties for it. Then remote workers and digital nomads to enjoy friendly tax rules under the new tax scheme. Looking at the digital assets, what we call digital assets are the assets like we have on now digital currencies like what do you call it again? There's one we call DBS. You have Rex and a lot of other ones that you have these days that are digital. You don't see them physically. You don't touch them. It's like intangible. If I should use that word in accounting parlance, intangible assets. Those intangible assets which have tendency of rising and also falling, same is also, period before now, we have double taxation on them. Why we say you have double taxation on them? Because most of these digital assets Nigeria do not have. It's usually a foreign companies, a foreign entities that has that, and we in Nigeria participate to invest in such current assets. So then, whatever benefit you are making from investing in that asset across board, they will charge you tax in foreign currency, and also when you come here, you also be subjected to tax. So, but the emergence of this now is to harmonize this tax system, digitalize the process, so that if you are charged tax in abroad, while you now bring the income home here, you are not going to be charged another tax on it. The only thing is that you need to provide evidence upon which your tax was charged over there, and also align with what we call effective tax rate of Nigerian system. So that will be applied, and at that point, you will exempt them from paying a double taxation that existed period before now. So members of armed forces that are fighting insurgency, insecurities, and in Nigeria presently are also exempted from paying tax. Then tax incentive for employers to recruit more people incrementally than in the previous 3 years. Period before now, whether you have you recruit constantly or not, there is no consideration at which you pay tax to government. But at this point, government is now looking at another perspective. How do we engage youths, our employable youth and employable age individuals to be busy, to be to earn income, and any company that have that flair to be able to drive that process, constantly engaging and employing people, and also meeting up their tax requirements. There are some waivers and exemptions that these companies are going to benefit as regards to tax incentives. So these are some of the things that the new tax act brought about. So individuals and households that will enjoy zero VAT on food, healthcare, education, electricity generation and transmission, like we have the Gencos and the Discos. These days, they are also have the room for exemptions for the tax for the electricity generation and transmission. The VAT exemption for transportation, renewable energy, compressed natural gas, CNG, baby products, sanitary towels, rent and fuel products. Some of these are how it also impacts on individuals. So if you are engaging in any of these businesses and as an individual, you are automatically exempted from paying any VAT to those business lines that you are also having. Hope I'm being heard. Hello.
Yes, we can hear you.
Oh, okay. Okay, that's great. That's great. So we also look at impact to businesses, small scale
Please, sir,
businesses.
I don't know if you can remove the icon on your screen. It's affecting us from reading along. You can hide it, please.
Okay, the Zoom icon.
Yes, sir. Yes. Thank you, sir.
Okay, okay. So the impact to businesses, which the new Tax Act also brought about, is that small businesses are not to be subjected to withholding tax any longer, because small businesses from the tax basis and ladder, we are looking at for any businesses that have its revenue below 100 million should not be paying tax. You know, withholding tax itself is an advanced tax you pay on doing your business, and you recoup that with advanced tax at the end of the year. So for small businesses which have their revenue, have their generate revenue across board for the whole of the year that is below 100 million, totally are exempted from paying company income tax, which is withholding tax being the advanced form of the tax you pay before the end of the year. So these aspects for businesses that are below this category are totally exempted from paying any income tax. But for the aspect of the company that are also exempted from VAT payment is when you have a revenue below 50 million, you are exempted from paying VAT. VAT is different from CIT, company income tax. VAT is value added tax, and value added tax is the base is on revenue, while their company income tax, the base is their net profit. So that's just the two different thing in these two in this term. So there is a creation of an office, like I mentioned earlier, ombudsman, to adjudicate on tax disputes and all that within 14 days time frame. So if you have any issue with tax, probably tax people slam you, probably an erroneous assessment, you are free to meet with this office, tell them your situation. Definitely you have your evidences, you have your records, you present it with them, they will look at it, they will take it up as a matter for free and drive down the process, drive down the issue to the logical conclusion. And if your records are clean and your data are okay, definitely that assessment will be repelled. So that is the essence of this tax ombudsman. It's an office created in the tax Nigerian Revenue Service as present to be able to, have one-on-one relationship with businesses whom are, passing through some tax issues, and they may possibly not have money to go through a legal process on their own. So tax people have created this office to be able to assist Nigerians that may fall into the category of issues, tax issues in that manner. Then consolidation of taxes and levies, thus addressing the issue of multiple taxation. Like I said earlier, agencies that are giving room to charge various kind of taxes in the past. Presently, there's a consolidation of those taxes that it should no longer be so. Like take, for example, for any company, period before now, any company who deals business at the end of the year, you're expected to pay company income tax, you're expected to pay Nigerian Police Development Tax Levy, you're supposed to pay stamp duty tax, and a lot of other taxes. But now there is a harmonization of tax that is now going to take, that has also taken effect, that at the end of the year, you do your tax computation, you do your report, you just pay a percentage, and it's called company income tax. When you pay that percentage, whatever tax that is due to the government is now left for the Nigerian Revenue Service to distribute that to all those stations, all those agencies for their respective service needs of it, which is one thing that the new tax act has also done, and it's also impacting in the life of small scale businesses and businesses at large. So we'll go through look at the next slide. Okay, like I was also mentioning, this is the summary of the aspect of the revenue basis upon which, or threshold upon which taxes are being charged. For aspect of VAT, like I mentioned, for small businesses, if your turnover is 50 million or below, you are exempted from tax. Then if you are above 50 million for standard businesses, mandatorily you need to register and also collect VAT and remit to tax office. And the percentage period before now was 7%, and they say maintain that 7.5% for VAT collection. Then professional service, if you are in professional services like consultancy, legal services, advisory services, and all have you, you are not in the category of any basis of revenue for you to be able to collect VAT and remit. So any revenue that you earn in a year, in a month, you expected to collect and remit. Remember, VAT is not your direct tax. VAT, value added tax, is the tax you pay on adding value to the person that you are dealing business with. Then, for example, Mr. A is a professional or is a business entity. He's selling his product to Mr. B or company B. It's that company B that is benefiting from the product you are selling while you are earning revenue from it. So them that are benefiting from that product are the people to pay VAT. You as an entity should be able to collect that VAT. How do you collect that? When you are giving them your invoice of, let's say, 100,000 naira, calculate 7.5%, add it to that VAT amount, to that revenue amount. That will now make up 107,500. That becomes their total invoice they are going to give to that company, entity B or individual B. So when the person pays you that money to your coffers, you are entitled, you are legally obliged to take away that 7,500, which is 7.5% of 100,000, and remit it to tax office. Failure to remit that within 21 working days, there are penalties to that. When we get to that point, we'll flash through the process of penalties. Then for company income tax, any of your revenue that is below 100 million and your fixed asset is also below or equal to 250 million, you are exempted totally from paying tax. So for large companies and other kind of companies that their revenue or their turnover for the whole of the year is above 100 million, they are the people to enjoy paying tax at the rate of 30%. So with this, it has harmonized the existing tax law where we are coming from to this and reduce the level of tax you have to pay. For period before now, there's no if you have the turnover of 25 million, that is below 25 million, that's where you're exempted. But anything above 25 million, there's a graduation. The first one is 20, the second one is 25, while the large is 30%. But now that has been collapsed, that if you have any revenue for the whole of the year above 100 million, automatically you are to pay 30% of your tax. So some of the key benefits that this tax reform has brought about is to boost government revenue, as increase in a tax base will result to increase in tax revenue. Believe you me, what this tax system is looking at, how do we increase the revenue that is generatable to the government? If assuming our population in Nigeria is 100,000, and period now the old tax is only like 70,000 persons are registered to TaxNet and also complying, automatically that revenue will just be revolving within the 70%, which is 70,000 people that are registered are complying. But the emergence of this new tax will now compel 100%, at least 80% of the populace to be able to register and also comply for their doing their business. And that will increase the revenue of the government. In as much as the rates of tax system have been reduced and some exemptions have also been achieved. But when the number is much that are contributing to these coffers, it automatically give back to an increase in the revenue tax system. So the reform also oftentimes will definitely bring about issues of employment generation for masses. Like, take for example, for we that are in the professional line, day in, day out, week by week, I keep receiving calls, I keep receiving invitations for training, for professional advisory, and all that, and all that. For we now professionals, another set of businesses also have an increase of tax patronage, have an increase of employment, engagement to people to be able to do business. And in turn, it brings about increase in revenue. For individuals also who are not gainfully employed, in one way or the other, can also have a leverage on how to, get some things to do and also earn revenue as the tax system has also given a lot of exemptions for small for people that are below minimum wage earners. It also encourage economic growth, as once these tax systems harmonizes and people outside Nigeria see that really this is working, tendency of investors coming into Nigeria will start happening. Things are now being transparent, things are done rightly, and people will now have confidence to come into Nigeria to be able to do business. And automatically that brings about foreign direct investment to the economy. And when that happens, the economy starts getting better automatically. But period before now, we have the likes of Dunlop, we have the likes of a lot of other companies that have exited Nigeria. Apart from the infrastructural issues that we have, some of multiple taxes that we are having before has also pushed some of these companies out. So, but the emergence of this act is looking at how do we bring in those investors back and even bring in new ones. So, if we do not address this new act and also understand it to ensure that we comply to it, definitely this will not happen. So, I believe the way they are going on about it, government is going about it, is to see that the economy at large increases. Research and development is another key area because of this new tax act. Believe you me, that is why all of us are here, to hear those new things that are happening. We are researching, we want to develop ourselves. What are those things that are happening now that I need to know about so that I will not fall a victim of any kind? This is part of what these reforms have also brought about. Then, using the recent tax reforms as a case study, it provides for additional funding for student loan scheme. I think we'll be hearing of that for over past period now. So we'll be looking at focusing on individual, because key focus on some of all these things at long run. How is this affecting me? How is it affecting my business? How is it affecting the take home I have? How is it affecting my life at a long run? So we'll look through some of the key things that new Nigerian Tax Act considers to relate with individuals, which first of all we'll talk of employment, we talk of the employer, talk of the employee, then you talk of the taxable income or chargeable income. For you to be an employer, definitely you have been engaged in one entity or the other. And definitely it could be an appointment in office, in public sector or private sector, upon which you gain revenue, you gain remuneration, you get salary at day in, day out. Then if you are running your own personal businesses, on that personal businesses you are running, you also earn income. You gain profit out of it. You gain revenue out of what you are doing. So that alone is also an engagement, is an employment to you. If you're not employed directly to an entity, you run your business yourself. You have employed yourself to do business, to gain income, to get revenue, to gain make profit at the long run. That is how it's affecting you as an individual. A person, an agent, manager, representative, or employer who engages the attention of or activity of someone in return for consideration. If I, as an entity now, engages anyone, automatically I am the one employing him. I am requiring his services, upon which I give him salary at the end of the month or end of the year, whichever the contract stipulates. That's become the part I play. So for me, who are employer, and for the person who is the employee, what aspects of this task act, what is he going to be imparting? How is he going to be imparting him or her? So bottom line, whatever thing that we are talking about, task acts presently is looking at those things that are taxable, those things that are taxable income, those things that can be considered as a chargeable income. We say it's an aggregate amount of which and is the income of the every taxable income for the year from inside or outside Nigeria. You know that some persons are in Nigeria and they are doing businesses, doing remote jobs and all that across board. So whether you generate revenue here in Nigeria or outside Nigeria, there are ones that are actually tax exempted. There are ones that are taxable. So those taxable lines are the things we are going to be looking at. You said taxable income lines as amended in this act now. It's saying presently before now, all these ones on black are there in the tax act, in the what do you call it? Company income tax period before now, and also personal income tax act before now. But this emergence of the new tax act now added these ones I highlighted in red. So this is a new thing that came up to amend the existing tax lines or taxable incomes that we have. First is profit or gain from business, trade, or vocation. Salaries, wages, fees, allowances, compensation, bonus, premium, benefits, and all that prescribed to the employer, to the employee. The royalty, fees, rent, or interest from the use of property. Dividend premiums, charges, and annuity. Fees, allowance, and other remuneration you earn as rendering your services. Discounts on rebates. Disposable income, disposal of money or money instruments. Income from profit, gain from disposal or lending of securities. Profit or gain from disposable of property or fixed assets. Benefit in kind provided to an employee rather, by an employer. We look at it, we make reference to the new amendment that section 14, 1 to 5 of the new tax act brought about. That will flash it when we get to the other slides. Then the key things that now came in: prizes, winnings, honoraria, grants, awards, laurels. Then we look at profit or gain from transaction of digital and virtual assets. So some of these things, these two key things, period before now was not there. They are not part of a taxable income. If you gain an award, if you gain prizes, or if it's monetarily enhanced, those things are not taxable period before now. But the new tax act have brought it in. That is, it's part of your income, it's part of your benefits you have received, and it's increasing the worth or your value. That also has to be considered at the point of generating or computing for tax at the end of the year. So the key tax act that directly affects the individuals on the emergence of this new act are these key elements. Personal income tax of 2024 was amended. The Pension Reform Act also was amended. The Employee Compensation Act also was amended. The National House Fund Act was also amended. So all these things, the amendment brought about enhancements of the exemptions to the individuals, something that can reduce the tax you are paying as an individual. So this also gears to bringing down the tax individual is paying or entity is paying to government. So some of the key exemptions, there are about 50 of them that are exempted. I will not run through them, but I'll just flash them. Maybe when the college probably shares the slide, you can get through some of them. So personal income tax, if you are earning a minimum wage or less, you are totally exempted. Your annual income up to 1.2 million, which is the bracket of 800 taxable income, is also exempted. Then your tax paid, to reduce your payee tax on annual basis as a gross income of about 20 million. If you are earning your income as a total income in a year at the range of 20 million, the tax you are paying based on the old tax act, compare it with present tax act, is now reduced, now giving you more leverage of your take home. Assuming you take home at the end of the month or at the end of the year like 15 million, with the emergence of this tax act, it has increased it a bit to like 16, 17 million. When we get to the practical session, we'll demonstrate all this and we'll now see how that comes to play. Then allowable deductions and reliefs that that tax act has also brought about. Though some of them are there before now, but tax act now have given more credence and powers to it, and added some other things to be able to increase the allowable deductions and reliefs an individual can get. Key one of them is pension contribution, national health insurance, national fund, national housing fund, interest on loan, life insurance, rent relief as at 20% of your annual rent. Period before now, there is nothing like tenant relief as the maximum. But now, new tax act is now saying 20% of your rent, but subject to a maximum of 500, is now tax exempted. So if you pay rent, whatever amount you pay as rent, you compute 20% of it. If it's up to 500, maximum of 500, you recognize as tax exempt, and that takes care of reduction of your tax you have to pay to the government. The expenses that you wholly incurred for generating an any income, like you run your personal business and you are keeping your record, which is one of the key things that presently Nigerians are not doing, keeping record or even your personal expenses. People are not taking cognizance of that. If you remember, like few months ago, people were making a video or making a chart that anytime you are doing a transaction, now you should put narration on your transaction. So what they are trying to communicate is for you to have a record, so that tomorrow, if you are being assessed, like if you want to meet the tax ombudsman now, they work with evidence, they work with figures, they work with documents. So some of the things that will justify what will reduce the tax you have to pay is evidence you have provided for them. They will now use it to adjudicate on your behalf. But whereby you don't have any record, you don't keep record, you don't keep any information to be able to, drive your tax process rightly, that becomes an issue. So income that you generate, there are taxes, there are expenses that you incur to generate income. Assuming you sell, let me say you sell television, you go to where you purchase it, you transport yourself to that place. If you incurring a logistic cost in bringing them to your warehouse, that's all those things are cost, not just the money you make as at the point of selling it. So all those things are considered at the point of you being assessed for tax purposes. But whereby you don't have this information readily available on yourself, definitely tax people will work with what they have and assess you. So what is he trying to say? At this new tax act, we should, individual based, business based, you should be, be abreast of the kind of information you need to keep, and proper information to be kept. Believe you me, these days we have gone past the era of paper documentation. A lot of companies now are going into ICT, accounting records keeping, upon which I think I have some clients have deployed a lot of accounting software, various kind of accounting software, and they use it remotely and they do their business, keep their record. At any point in time, you can get history, past records in the history. But if it is hard copy or paper documentation you are keeping, there's tendency that such a paper can get burned, can get destroyed and all that. And the legal archiving act is saying within the first 5 years, their document is valid to be used to for any court process, for any this thing, any tax defense and all that. So you should be able to keep your records fine. So because if you have documents that is way back 7 years, 20 years, tendency of that document to still be genuine and not being defaced is highly there. So with the emergence of these softwares, accounting softwares, it also have enhanced the way upon which records are kept seamlessly. There are ones I developed to one of our clients. You can, on your phone, you do it on the go. You can do your transaction posting on the go. Keep record keeping on the go on your phone, and that's it. You don't necessarily need a system. You might need it for people in the office, but if you are always on the go, you have an app that you put your records, and that settles the issue, take care of your record keeping, so that at the point you are trying to prepare for your tax computation or assessment, you can, get some of this information, get some of these records, and also make use of them to pursue your tax process. So gratuity and pension are also exempted. Capital gain tax, then company income tax. I think I've said something of this company income tax, 100 million and above on the asset. So I won't be going through them as it is, as I've mentioned them earlier. So let us look at the residence rule. Residence rule also talks about individuals and the likes. So the employment income from Nigeria is now to be based on the residence rule, status of individual, whether or not the duties or employment are wholly or partly performed in Nigeria. What this is saying, assuming you are here in Nigeria and you are employed abroad, you are doing your remote work abroad, you are to be taxed based on your residence. You have to be subject to same applicable to people abroad doing business here in Nigeria. So one key condition is that if a person is a resident, if he is, one, domiciled in Nigeria, two, has a permanent place available for his domestic use, has a place of a habitual abode, has substantial economic and immediate family ties to Nigeria, sojourn in Nigeria for 183 days or more in the 12-month period. We know that the number of days we have in a year is 365. So that is saying, if you are here in Nigeria and you do your business within the number of 183 days, automatically you are regarded as a Nigerian resident. And your income is also subjected here in Nigeria, not abroad. Even if the ones you are being charged abroad, you have your record with this tax act, digitalization process and all that. Tax people know how to go about bringing your tax home to Nigeria because you are residents of Nigeria. Then two conditions: the duties of employee are wholly, partly performed in Nigeria, and the remuneration accruing while Nigeria is not liable to tax in the employee country and tax residence. Expatriates on assignment to Nigeria may now be liable to tax on their worldwide income if they satisfy any of the triggers for tax residence in Nigeria. So for any foreigner that comes to Nigeria and he satisfies these conditions, he stays in Nigeria for 183 days, automatically his expatriate tax is being paid here in Nigeria. It's not taken abroad as it used to be in the former tax act. So key changes or highlights and the impact. Firstly, for filing, tax filing, individual should now be mandatorily filing annual tax. Currently, that before the new change, individual taxpayers are required to render a return of income earned from all sources within 90 days into the new year, maximum up to 31st of March. That is in practice. But the new changes that came up now is saying same provisions are applicable on that, but all employees are specifically mandated to file annual income returns, regardless of their employer's filing, obligation and amount of tax they due. So if you are employed, that's your employer must have taken away your pension, your tax, which we call pay as you earn, payee. Once they collect it, deduct it from your salary, they remit it to tax office, and they also mandated to file. That was the old system. In as much as that system existed, but it was so weak. But now it's now make mandatory that every employees are mandatorily to file, irrespective of what the company where you are working with or working for has filed. You yourself should be able to file. What's the essence of that? Because these days we know that some persons or individuals do one or more than one jobs, like what we call randomly call side hustle. If you do side hustle, you do some businesses by the side, aside your income you earn genuinely from where you are employed. Those side hustles should form part of your income, total income for the whole of the year. So that is the filing, apart from what your employer have filed. These are the additional information you need to file and also pay tax on. So when you put them together, you take away the ones your employer have remitted to government. So the other criteria and elements of tax that has not been covered, you are not supposed to now pay tax on that. That was not, specifically mentioned in the previous acts that we are using. But this new act is now mandatorily saying that we should do that. So if you fail to do that as an individual, if you fail to do that, automatically there are penalties and consequences that are also there that one should bear. So then the next line of thing or key changes, the unilateral relief of double taxation. Like I said earlier, there was this was not previously in the old act or old law, whereby you earn income here in Nigeria, you earn income abroad, and we are tax for countries that we have tax treaty. When we mean tax treaty, we have an agreement, tax agreement with some countries, like ECOWAS countries and all that. You have tax treaties with them that whatever tax income you earn, there's a level at which the rate at which tax is to be subjected to those income you earned abroad. So before now, that aspect of the law was not specifically mentioned, but the new tax act has brought it in that there are considerations to that effect, so that when you are being taxed here in Nigeria, those tax you have paid abroad is considered to be able to reduce the level of tax you are now going to pay, if there is anyone that you are going to pay in Nigeria upon the assessment of tax office. So whereby any part of this income residence in Nigeria derived from outside Nigeria has been charged, those sources are going to be considered. Then there's expansion of the list of income chargeable to tax. The law did not also expressly include some of those income heads or income line, like I said earlier, from what I flashed earlier. So, but this new tax act has brought about one, like I highlighted red in one other slide I had before. That is also considered. So the impact now is to resolve controversies regarding the chargeability of these classes of income and gains, especially digital assets such as cryptocurrencies. Cryptocurrencies before now, there has been a dive around it, argument, how it's to be charged, how it's to be subjected to tax and all that, at what point is it going to be subjected to tax and all that. But this new tax act have not specifically brought it into the tax net. So the other ones is exemption of minimum tax. Okay, I think I've said this earlier. Exemption of work tools from taxable benefits. The law before now do not have express exemption to work tools. Work tools are your laptops, your equipment, your table furniture, a lot of other things that are work tools. There are some of them that were not expressly mentioned or exempted as tax. This emergence of these new acts have clarified the exemption of such assets from such class to be exempted from tax, and that has increased the benefits of also the individual and also a company at large. So mandatory registration for tax identification number. Like I know, think towards November, December, people were like having this confusion. How do they register to tax and all that and all that? Why is tax ID now mandatory? Because there is this process of digitalization. Everybody has to be involved, contribute to the commonwealth of the nation, pay tax as it should be. Not that Mr. A is paying, Mr. B is not paying. But when we try to critique the government, both of us will critique, but we are not paying, we are not, part of the people who contribute to the development of the nation. And we are at our own coffers. Believe you me, we know what is happening. That ideally, the tax we pay should be what we use to meet the government obligation by infrastructure development and all have you. But first thing first, the tax system, the administration, the act, the laws that will back the run of this income generation, and the law that will also back the utilization of those income generation need to put in place before things are being done. So when there are lacunas, when there are issues, of harmonizing this existed, things that are happening before now will continue to happen. Like what we have, the information, the circular we got 2 or 3 days ago, the NNPC, period before now, they sell their oil, they get the money, and they utilize it themselves and remit a portion to federal government. In as much as we say, we know that NNPC is the owners, Nigerian government is the owners of NNPC, but there are managers that are there. But what president did within this year is to enact a law that whatever revenue generated from oil should go straight to the coffers of federal government. Upon there, then allocations and all that is being distributed, because the entity, the agency, which is NNPC, the agency of their own, they shouldn't be running a parallel revenue from the entity that put them to existence. So that was one of the key measures, the key steps that was taken within this week by the president to also harmonize that aspect of revenue generation. So the key other things: valuation of living benefits, total rent amount, rent exemption that we talked about earlier, also has been bring into bear. Period before now, those exemptions were not there, were not given. So we now talk of capital gain tax, which is compensation on loss of business. So capital gain tax is liable to 10% compensation to any loss of business. As you are in business, you are working, all of a sudden you are, you lose your job. Tax, the new tax act is now giving credence, giving attention to loss of such jobs. So if you lose your job and you now fall back on selling some of your assets to sustain yourself, so that is saying now, if those assets you are selling to make a living, if they are below 10 million, automatically you're exempted from paying any tax at all. But if they are above 10 million, then 10% of it will be liable as capital gain tax to such kind of situations, which was not there in the which was earlier. Okay, 10 million was there earlier, but it has increased from 10 million to 50 million now. And the percentage of that 10% we are paying before has also been increased from 0% now to 25% if your asset you are selling is above 50 million of the tax on the sales you are making on your assets. Then taxation on accounts of citizens, not applicable in the current law. The remuneration of an individual from employment is not chargeable to tax to Nigeria, where individuals of Nigeria performs the duty employment foreign country and local country. So some of these things are also part of what exemptions or key changes that existed. So the new tax act for individual now, the old law was saying that the tax of individual, before you are subject to tax, this tax band is a tax band that is being considered before arriving at your taxable income, or tax you have to pay to government. So whatever you earn, when you calculate your total income for the year or for the month, you take away all the exemptions. After you take away all the exemptions, whatever that remains, you now subject them to this tax band, for you to arrive at the tax you have to pay to government. So the old law is saying 300, 300, 500, 500, 1.6, and 3.2 and above on this percentage. But the new tax act now is saying for anyone at the first 800, you are paying 0%. The next 2.2 million, you are paying 15%. The 9 million, you are paying 18% and all that. This, when we are doing practice session, we put all this into perspective and we'll see how that now applies. So in doing some simulations that we did, subsisting law, which is the old law, if your total income in a year is 5 million, the annual rent is 1.5. Automatically in the old law, the only what we call consolidated relief allowance, which is fixed at 20% of your income plus 200,000. That is the essence of what you will get as a tax relief. Then we now consider some other variables to be able to get your total relief. So on the old law, we are going to be having total relief of 1.2 million, while in the new law, you're going to be having a total relief of 300,000. But the good thing about it is that what we are looking at is the bottom line, not the total relief level. So the bottom line now, going by this first category, you will see that the pay you are going to pay at the end of the year for the old law will be 704,000. While on the new law, which is now having put to practice, you're going to be paying 636,000. So if you're looking at that, the effective tax rate on this in the old law is about 14%, while the new tax act is now bringing down the tax you have to pay, and your income also, your effective tax rate becomes 12.5%. So at that graduation, if you look at it from each of the class of revenue down to 365 million, you see the rate at which the new tax acts have reduced the total tax you have to pay to government, and also considers you having more money to your own coffers. We'll do a practical hands-on on this in next time to come in a few seconds. Now, permit me to share my template. Okay. Can you still see my screen?
Your screen is still visible.
Okay, you can see the Excel screen file I'm sharing, right?
Yes, sir.
Yes, yes.
Okay. So this is a practical. Is that?
Yes, we can see your screen.
Okay, fine. Thank you. So Mr. John have this as his income or earnings he make on a gainful employment he's engaged in. So his basic salary, we are looking at basic salary to be 750,000. Sorry, 7.5 million that's annual. In this, we are looking at old tax law now. What is the impact of it vis-a-vis the new tax act? Then his housing, he has 1.2 million. His transport, he has 800,000. Other allowances, also he has 550 million. Hello, are we together?
Yes, please.
Okay, so yes. So remember what I said earlier. Some persons who are gainfully employed in one business, in one company, and they're also doing some side hustles to earn a living, additional income. So the first aspect that I colored light green, we'll call them employment income. These ones, because once we are employed, we are giving a contract agreement, which is employment letter. In that employment letter, you are expected take home, both gross and net is also specified. And what makes up such specification are what I just highlighted, because these are some of the bases upon which tax are also being applied. Now, all these ones above are what we call employment income. Let me give it a color green. We call it employment income. Then other side hustles or other things you do whereby you earn revenue. Maybe you do a little trading, you do a little TikTok and earn money. You do a little side hustle that you earn money. All those ones are now can be categorized as advisory services, consultancy services, trading income, rental income. Let me just also take, for example, this. How much should I put here? 200,000. Rental income, you have like 1.2 you pay in the year. So at the end of the year, your annual income is 12 million, 12.8 million. Now let us look at those relief, those things that are exempted, statutorily exempted, and also you can also bring in that tax also considered for you to use to reduce your tax. One in the old law is saying that you have a consolidated relief allowance, which was earlier said is to be 20% of your total income, earned income. This is your total earned income. This is your total income. That's 12.8 million. So the tax law is saying that it should be granted 20% of your total income plus 200,000. That is the old tax law. So let us also apply that and see what it can give us. This is 20%. Sorry. %20 plus 200,000. So we are gaining 2.7 million as your relief. Then pension. Ordinarily, pension is basis of pension is your basic housing and transport. We call it BHT. We call it BHT basis. So, and that statutorily is minimum of 8% for employer, employee, while 12% is for employer. So it expected that 12% from employer or above is to be paid by the employer, while on your own 8% is deducted from your salary, and that forms part of your exemptions. So we'll now look at what make up that 8%. 8%. So we'll say summation of sum of this, and this.
Mr. Prince, your screen is not viewable. It's showing here, but nothing. We can't see what you're talking about. We can only hear your voice. Great.
Oh Lord. Oh, so sorry. I thought
I can see
it from my end. It's viewable from my end.
From my
So maybe
end
you
here.
need to log out.
Maybe you should check your side. Yeah, I can see it from my end too. So maybe you check your side.
Okay, then let me log out and come back. Thank you.
Oh, okay.
It's viewable from my end as well.
Okay. So for pension, we have to, have exemption of 760 based on the 8% of BHT, which is the basic housing and transport. Then there's another one. If for persons that do life insurance, and that class of life insurance is actually tax exemptable, you also need to consider it while as exemption while computing for your tax. So assuming you have such, you will also bring it in here. Then if you are contributing to National Housing Fund, we also bring it here. Then National Health Insurance Scheme also, you also bring it here. For public offices, for public people that are working in government offices, some of these are mandatory, like NHSF, NHIS are mandatory for them. Then pension and other, but for private companies or private individuals working in private organizations, the only one that are majorly compulsory is the pension, which is 8%. So if you voluntarily do some of these ones, it's to your benefit as an individual. It's a benefit for an individual to be able to reduce your tax you have to pay at the end of the year. So what it means now, if you have any of these while you are working, you have any of these policies you are running, just communicate to your HR of your organization, give them the contract documents, give them the evidence of payment you do, contribution you do. Then while them computing your tax for the month, for the year, they will use it, apply it to your tax computation. That will further reduce the level of tax you have to pay. So that is the impact of this exemption. So if you don't have all these things, definitely your tax you have to pay to government will also be on a high side. So what am I saying for encouragement for us now, or the key tips we can drive now? If you have some of these things, you are doing them, and you are not communicating to the HR of your organization, you are just shooting yourself at the leg. So something you can use to reduce your tax you are paying to government, you are just ignoring it, and you are incurring that expense. Though at the end of the day, money will also come back to you, but for purpose of tax computation or tax assessment, you should be able to provide such information to your employer. Then if you are an entity of your own, you run your own business, and you have all these policies in place, while you are assessing yourself, because the laws gives you room to do a self-assessment. I know majority of persons don't know how to do a self-assessment. But you can consult to tax practitioners. They can guide you and also help you to do that. Even at the point of doing the filing, you can help you do all this computation and do your adequate filing for you and tax you need to pay, so that the consequences of not complying will not be upon you. Now, voluntarily, aside the statutory own, which is that 8% that you have to deduct from your salary, if you have additional contribution you pay to pension office, which is pension fund administrators, you pay to them, the tax act now is saying also you should consider them as a tax exemption, as a relief for you to be able to pay any tax you are paying. Are we together? Any confusion on this? Okay, so if you have a mortgage, so if you are running a mortgage scheme, and there is interest on the mortgage you are also running, the tax act is saying that it's being considered also as tax exemption. I believe you understand what is called mortgage. You took a loan from a bank for a mortgage home to acquire a house upon which you are living, and you are paying interest on that loan. So that element of the interest you are paying to be able to pay off the loan on whichever time period you are paying it, that element of interest, tax act is now saying that interest you are paying is exempted. Is to be considered as an exemption while computing your tax. So if you have such scheme, such arrangement, whatever interest you are paying in that line, you should also bring it in while doing your tax computation. It will further reduce the level of tax you have to pay to government. Then why the last one I also included here is the expenses you incur to be able to generate your non-employment income. Like I said, non-employment income is one, consultancy fee, advisory services, trading income, rental income, all those things that you are not gainfully employed by an entity, but you do those side hustles to earn income. So any expenses you incur in be able to generate that income is to be considered as also a relief for you to be able to pay a lower tax rate. So if you have those records, like I said earlier, key thing is record keeping. You need to have adequate record keeping that we can use to justify whatever assessment or whatever presentation you are making in the eye of the tax, so that will grant you the relief you are expecting. So at the end of the day, the total relief or reduction that we have here is 4.2 million. And that 4.2 million, if you take it away from your total income, this is your total income 12.8, you take away this 4.2, you now have 8.5. So this 8.5 is what we call chargeable income. So it's on this 8.5 that tax band is going to be applied for you to now know what element of tax you have to pay. So let us run through the tax band. This tax band now, like in the old rate, he said the first 300,000 is having 7% tax to be applied on it. So what it means is that 7% of 300,000, whatever it gives you is the tax you are paying at that level. At the level of the next 300 is 11%. We also apply it, it gives us 3,000. The next one is 500. What we're trying to achieve is this 800,000. So the next one is 500,000. Apply 19% on it, you have 95. The next one is 1.6. When you apply the 21%, you have this. So at the end of the day, the excess, which is the above, is total of cumulation of this 1, 2, 3 down to 1.6. You have, if you look, you have 3.2 million. If you look at the bottom line, then you have summation. You have, so this 3.2 million, you take it away from the 8.5, whatever balance that is remaining, which is this 5.3 you are having here, is what we are going to subject to 24%. So that is what you have computed as your tax. So summation of these items now gives you 1.8 million, becomes your taxable, your tax payable to the government at the end of the year. So if you want to now translate it to the month, there's two ways you can do it. Either you go by this, divide by 12, or you go by this, divide each of them by 12. So it depends on how you work about it. So that also gives. So on monthly basis, this is now becoming the tax you have to pay on monthly basis. So let us now look at your total income. Your annual pay now becomes the annual pay becomes total income minus tax. Total income is 12.8 minus your annual tax, which is 1.8, become 10.9. So on the end of the year, if you take away the tax elements from your total income, you're not going to. So for monthly basis, this becomes your net pay on monthly basis. For somebody that is earning this 10.8 million, 12.8 million as his gross income yearly, then if you look at it gross too, it's just a matter of dividing this by 12 for you to know what it is on monthly basis. So the gross amount before tax is taken away is 1,066,000. So when you take away the tax element on monthly basis, you now go home with this. So this is the position of the old act. So let us now look at the new act. We are still going to make use of these parameters or this income element to do that. Let me quickly bring it in here. I'll just do a direct link so that I was just be fast on this. Fine. So we have this. So the new Tax Act now is saying that the only relief that you are giving is not inclusive of the consolidated relief, which is in the old Act 20% of your earned income plus 200,000. That has been abolished. So the reduction or relief that the new Act is saying is starting from your rent, your pension, then all these other elements, national housing, annuity or life insurance, voluntary pension, interest on mortgage, expenses you incurred in generating income. So assuming you are paying rent of 1.2 million, you just apply 20% of it. So 20% is giving us 240. It's not up to 500,000. So if it's not up to 500,000, it's only 240 you can apply as your relief. Assuming you are paying rent, let me see, 500 divided by 0.2. So assuming you are paying rent of 3 million naira on annual basis, sure, it is 30 million. So the maximum 20%. So 20% of this 3 million is giving you 600. So if you are paying rent of 3 million, the maximum tax relief you can get is 500,000. Irrespective of the fact that if you apply 20% to it, it gives you higher than 500,000. So the tax law is saying 20% of your rent, but maximum of 500,000. So if you apply 20% of your whatever rent you are paying and it's above 500,000, the extent you can get is 500. But if it's below 500,000, so the resultant effect of that 20% is what we are going to apply, which is what we just did to arrive at it. Because this person was paying, is paying a rent of 1.2. Oh, do we even consider rent on this? Okay, you see. So in the old law, there was not rent relief, but in new law, there's a rent relief. So which gives us this. So when you consider the BHT, which is a pension, statutory pension, you also have that 760. So at the end of the day, you only have 1.750 to remit, as your relief. So let us also apply this on the new tax band. Like we said, the new tax band, let me also flash it again. The new first one is 800,000, which is zero. You are not paying tax on that. The next 2.2, you are paying 15%. The next 900, you are paying 18%. Like that, to up to 50 million. So let us also run through this in the tax band to ensure. Let me just take it off so that to avoid us switching off and on. Okay. So the first 800 is 0%. So there's nothing computed. The next 2.2, 15%, that's 330. The next, this is 9 million. So when we add 9 million here, is it going to be in excess of 11.5? Yes, it's going to be. So what we will do is to get out the difference between the 11.5 and the percentage we have computed already. So at this point, what I'm 3 million. So this minus 3 million so at this point you can see that total taxable income or tax you have to pay is 1.7 as against the old law which we are having 8.3 or 1.8 rather. So we are now comparing the two. This is the tax you have to pay in the new law, and this is the tax you have to pay in the old law. So you also look at it vis-a-vis in the monthly basis. We are now paying a tax of 148,000 as against the old law, which we are paying 153,000. So with these two now, we can see that the new tax act is reducing the level of tax we have to pay to government. And what it happens now, it will in turn increase your income, your take home. Let's also look at what the impact of this 12 million minus the tax you are paying annually, which is 1.7. You can see now that your net pay or net take home has increased, have improved by 12. Let's see the even percentage upon which it improved. This minus this. So, that improved by 5%, almost 5%. So that is what the new tax act is coming up to play, or how it impacts the individual in the organization, individual in businesses. So the key thing is that, like I said earlier, for us to be able to achieve this, you need to have a proper record keeping for yourself. We at the point, I know at this first instance where this tax is starting, there may not be that forceful push for penalizing people, but the law is there. And whenever they start, I know how Nigerian people behave in terms of tax compliance. And the way they are looking at it is full compliance. So if you are not complying, you might be surprised that you'll be having penalties accruing to your tax board in your tax portal, but you do not know. But any day you want to do, you are trying to do something that will require you presenting your tax clearance, then you now say, let me go and process and have a clean tax clearance. You might be not seeing an accumulation of penalties that is actually lining up. I don't know number of us that are here that did tax filing for the year, for last year, that the tax authority also, Lagos State precisely, shifted the deadline from 31st of January to up to February 3rd week. I don't know how many of us that did that filing. So if you are not able to do that filing, automatically you have a penalty awaiting for you on your tax portal. So anytime you might be needing something that will need you to get your tax clearance, you'll be facing that consequence. So ignorance at any point in time, it might not definitely be an excuse or justification for you scaling away from tax. So it's better that we know some of these things and prepare ourselves. Like what I advise people from the day one of a new month or a new year, start doing a tax planning. How do you do tax planning? The things you know you are doing to generate revenue and the things you know you do to generate income, which is expenses and all that. Try as much as you can to keep record and track of them. Then know the deadline that you have to apply any tax filing up to. So when you know the deadline, you know the consequences, that will prepare you to prepare yourself ahead of time so that you're not fall a victim. I know that Nigeria, a lot of things happen, but all the same, you being aware of what is in for you, it goes a long way to prepare yourself to avoid you being penalized. So in quickly wrapping up, I also brought out this for people who do not know how to go about getting tax ID. Assuming you are in this class, you don't have tax ID, you don't know how to go about it. This link I highlighted in red, taxid.nrs.governance.ng, for individuals, for a small business company or company as a whole registered with CAC. You can come at this using this link to generate tax ID for your company, for your individual. For individual, I know you may need your NIN, you need your, NIN or voter's card, I think so, to be able to fill this form and get your NIN. And this is automatic. once you complete the filing, the documentation process, automatically tax ID will be generated for you. So if you have a tax ID already with Lagos State government, once you use, if you use it to on this portal, it will give you your unique tax ID that will be now tied to both the federal and the state. For your businesses, you need this. So if you have not done this, you can just go to this platform, type in this, your NIM or your registration number of your company, and use it to generate your tax ID. It's very key. Then for tax assessment, like all this explanation, this computation I did now, you can do your self-assessment by using this link where we call fiscalreform.ng.n.peter calculator. This link or this barcode, you can just use your phone and scan it. You can take you to that link. That will help you to do your self-assessment yourself. You have all this explanation, this computation we just did now on your own. You can just key in all those income levels you have and the exemptions and all the exemptions, your rent and all that amount. System, that app will help you to generate your taxable income and your tax you have to pay in annual and also in monthly basis. So highlight of some of the consequences or penalties that individuals or companies can fall into for any entity. For individual who fails to register for VAT purposes, if you are doing business as an individual with your business name, with your whatever, and you have not registered for VAT purposes, the first month of default is 50,000 naira. And subsequent month, as it continues, 25,000 naira is cumulatively added to it. Ordinarily, from the time you register your business, the law permits you up to 6 months for you to do your registration for VAT purposes. Go to tax office, document your company, and you have your TIN, your tax ID, filed at a particular tax location. That shows they'll give you a letter evidencing that you have registered for VAT purposes. That clears you. So within 6 months, you have to do that. Anything beyond that 6 months that you do not do that, any day you wake up to do it, the tax office will just compute these penalties for you. But one key thing we also advise for individuals who may not really understand some of these things, try to engage with tax practitioners, and get some advisory services from them. Even them helping you to process it. Like we engage in tax office constantly. We know some of these things and know how also we can also use human face to try to persuade some organizations or some tax officials to tamper justice with mercy to be able to, scare you through to this. But ordinarily, that's supposed not to be as it is to the Tax Act. So failure to register for companies, you have 100,000 as a penalty in the first month of default, then subsequently 50,000. Subsequent for companies who fail to grant access to deployment of technology is 50,000 naira. Like I was saying talking of e-invoicing at the earlier time, for companies who now refuse, I don't want to register for deployment of e-invoicing, it's yourself you are doing. Because automatically, once you have been accounted for not granting access, not having that, because I think they gave up to last month, they said that process started since around June, July last year for all these big companies to register for e-invoicing. And exemption have been given, constantly exemption have been given for them to register, I think up to February or January this year. So if such companies also persist and feel that they don't want to register, automatically they will fall the victim of these penalties. 1 million for first day of default and 110,000 for each subsequent day of default. Then failure to use for fiscalization system, you have 200,000 plus 100% of tax due to be paid and interest on prevailing CBN rate. failure to deduct tax, which is your VAT. The first month of failure, you are already given to yourself 40% of the amount that is due, assuming the tax you have to remit to tax office is 100,000. The value of the amount, which is 100,000 plus 40% of that amount, which comes up to 140,000, is total penalty that is you have to incur for you not to deduct and also remit to tax office. Subsequent is failure to make attribution 100%, 100,000, failure to remit tax deducted as source or self account. You have you also pay 10% administrative fee. If they get to the point that the tax office are now the one chasing you about to be able to remit those taxes, at the end of that day, you are going to pay the amount of tax you pay the penalty that is attributable to it, and also pay an administrative fee of 10% per annum. So what the tax law is giving, as much as they are giving a lot of exemptions and relief, they also put a stiff consequences for people who may fall a victim of some of this. The essence is that everybody has to be compliant. So what are we saying? The summary achievements of the new tax. In the old tax, we have multiple tax agencies, conflicting rules, but in the new system now, we are now looking at unified digital platform. Paper-based, time-consuming system that we are applying in old tax system. But presently now, we are now having online filing, which is more faster. Before, you have to queue up to tax office to submit your file for tax filing. But in the comfort of your home, you do your filing and go your way. So hidden and unclear taxes in the old tax, but new tax now, it makes everything so clear that you need to know. So there was high tax evasion and low compliance in the old tax system. But now, with built-in digital system and processes, there is a tracking. With your tax ID, there is a tracking. You can read your revenue, your sources, and all that is being tracked. That you cannot say you run away from it. As the comfort of the home of the Nigerian Revenue Service, they can view your bank statement. So even if they ask you to bring it and you refuse to bring it, they can view it and tell you what and what that you have to pay as tax. It's not onus on you. If you have your record and your documentation, you cannot prove to them that item XYZ that is found in your bank statement are not income. They are so thing. Then which, if it's in line with the tax act as exemptions and all that, that will be recognized and that ends it. So key thing, bottom line, record keeping is key for compliance. Limited exemptions, but now more tax relief and incentive have been released. So compliance strategy is a clear-cut culture that we need to deploy. Orientation presently, tax in Nigerian Revenue Service have been ongoing, a lot of orientation, sensitization across board in deploying this system, and also making people aware of what is obtainable for them to do. Then we know that willingness and resolution to embrace change by tax paper, there may be a stiff and all that, conflicting in this. But key thing is that consultants and other stakeholders are hands on deck trying to explain these things to individuals, the general public, so that we should be able to be aware. Ignorance, like I said earlier, definitely is not an excuse for one not to be compliant in tax matters. More advocacy and programs is being deployed both at the level of government and also some other stakeholders like professionals in the industry, to be able to see that people have idea of what is going on and also not to fall a victim of what can happen in future. Promotion of digital process across board. As a matter of fact, companies have tried embracing. A lot of companies are now gradually going into this fiscalization process. Enrolling in e-service platform. People, for small companies who are not yet been, put to the net of them coming into e-service system, they are now encouraged to start now to have accounting record keeping that is seamless for them, which is deploying accounting softwares. There are a lot of cheap accounting softwares that are out there that businesses should be able to, use to run their business and even know when they are performing well. A common businessman out there, what they are after, how much have I made as sales at the end of today? How much sales have I made at the end of the month? How much sales have I made at the end of the year? They are not looking at the cost of even running that business. Is it profitable? But when you have a record keeping that is seamless, that is okay for you, you keep your level of your day-to-day operation income and also keep your day-to-day expenses you are incurring. At the end of the month or end of the year, you can actually tell yourself true that one, you are making profit, this business is sustainable or not. So it's key thing that record keeping cannot be overemphasized as regards to individuals or businesses that are running at this present time as in line with meeting to tax obligations and compliances. So tax planning, like I said earlier, is a key thing. Both individual and corporate as a matter of necessity need to raise all ongoing contracts and agreements, thereby ensuring strict adherence to the new tax act, which already began since January 1, which has been the deadline of commencement date. So with this, I say thank you very much. If you have questions, feel free, drop a chat. Think a day is still online. You can take those questions gradually as we proceed. Thank you very much.
All right, thank you so much, Mr. Prince. Please let's appreciate Mr. Prince in the chat box. Please let's all appreciate Mr. Prince. Thank you so much for your time, sir. Thank you so much. Right now we'll be taking questions. Please, if you have questions, go ahead to unmute your mic and speak, or you can rather chat in the chat box. Questions.
All right, Emmanuel, just while you wait for the questions, I want to personally, first of all, thank Mr. Prince. Thank you very much because this session has been very explanatory and very detailed. At some point, I was saying to myself, we have overshot the time, but it was worth it because you went into details to clarify us on very vital and important aspects of new tax reform. And I believe that everyone on the call had gained value from today's webinar. And so special thanks to you. Thank you very much for sharing your time with us, your wealth of knowledge with us. And we look forward to having more collaborations with you. And please do share your LinkedIn link, the link to your LinkedIn handle in the chat room. There could be some persons who would like to reach out to you, as the case may be, probably for consultancy purposes or the like. So please do well to share your LinkedIn handle link in the chat room. And once again, thank you so very, very much. Thank you very much. Emmanuel, over to you, please.
All right, thank you so much, Madam Edith. Mr. Prince, we have a question in the chat box. Someone said, Daniel Kenneth said, the national housing, how does it work?
Okay. National housing first is an agency of the government whereby you do a contribution voluntarily. For private individuals, it's a voluntary act, but for government, they have also make it a mandatory that out of your salary, they have a percentage that you contribute to help to develop buildings upon which you can apply for mortgage purposes and also be taken. The cost of that building is going to be taken on a graduated rate from your salary for people that are in government. So for people who are in private organizations, they are encouraged also to register they have their own window for them to register with the National Housing Fund and also comply with definitely the organization. You definitely should have an organization where you are working, or if you're in a private business, you should definitely have a registered private business that they can really say that is an entity, a valid entity. Then you have a good tax record also, that you present your tax details and all that. They will use it to verify the existence of that organization where your business you are running. That you will now register and be doing that contribution. So at some point, there's a level you reach at that contribution, you cannot apply for a mortgage loan for you to acquire a building upon which the loan is now you can now use it to pay an instrumental basis. So that's how it's being run.
All right, thank you so much. I hope Daniel Kenneth got that. If you have any more questions, please you can chat in the chat box or go ahead to unmute. And Mr. Please, can you share your LinkedIn link, please, your LinkedIn profile, so we can all connect to you on LinkedIn.
Okay, I'll drop that shortly.
Okay, thank you so much. So if you have any questions, please go ahead to unmute or chat in the chat box.
Good afternoon, everyone. I hope you can hear me.
Yes, all right. Yes, you're loud and audible.
Okay, thank you so much. So I have 2-3 questions to ask. So, and it's with respect to this VAT. So you said small company small company, that's a company with turnover lower than below 100 million are not expected to pay VAT. So I now want to ask, so when you're talking about, are you talking in terms of the historical, or is it based on classification or based on their history of turnover? Because, for example, what I'm talking about is, if last 2 years ago, the company made a turnover of about 120 million, then last year about 70 million, it's below 70, it's below 100 million. So are they now expected to pay VAT, or is based on classification when the company is being classified? So that's one question. Then second one is, so if I have a company that is a big company, that means my turnover is over 100 million, and I want the service of another company that's below 100 million. So, and this person is expected, so because I'm a big company, I'm expected to collect VAT because this small company is expecting my services. I'm rendering services to him, so I need to charge this small company VAT. So, but because he is a small company, he's not, based on what you said, he's not expected to pay VAT. But I'm a big company, I'm expected to charge VAT. Can you please try and explain that aspect? So it's somehow conflicting to me. Then thirdly, so if there's a company that's not been compliant to all these taxes, but because of this new tax law, they now start to comply, all the VAT, the PE, and everything. What's the implication? Will the tax authority now would they now start looking at the previous years, or because the new tax law, they start afresh? Thank you.
Okay, thank you. Taking from the last question, for company who have not been complying before now and start complying now because of the new tax act, generally, even before this new tax act comes to play, the tax law, the old tax law, which also is being maintained in this new tax law, gave the tax authorities the room to do a back duty assessment, maximum of 5 years back duty. When I mean back duty, 2025, which is just ending now, before even get to them, we must have done 2024 tax filing and not compliance. So they have the right to walk back 5 years from 2024 down to 2009 to do a reassessment of your tax position. And in those years backward, what they are going to be applying is the law that existed in those years backward. Whatever law that is existing in those years backward, that is what they are going to apply to reassess the position of your tax you have complied in those years past. If there are additional assessment that will come up in that assessment, you will have to pay after all due discussions and other meetings, evidences provided, and all that, and all that. Then if that becomes your position that you need to pay in those past years, you now have to pay it. So that is the rule that's been there in the old tax act and also maintained in this new tax act, 5 years period for them to do a back duty assessment. But if it's in warranting investigation, maybe something prompted for investigation in their company by tax people, they also have the leverage law backing them to even go as far as 7 years backward to do a back duty assessment or investigation. So it has been there in the old tax system or tax law and also been sustained in this new tax law. So it's not just the new tax law coming in that will prompt that for them to do back duty. It's there. It's in the back. What some things that can prompt that is somebody who have not been complying, and with this new tax act now, which is now bringing everything to bear, assuming you have been making a revenue of 100 million, and when you are doing your past year filing, you are filing 20,000 as your turnover. So when things are brought to bear now, or suddenly something they are doing, filing for 20,000 or 20 million last year, previous year, because you are cutting costs, cutting the revenue down, or shielding some revenue. So this now event of this tax act, which will now expose everything that you are having. If they now decide that something that has happened, is it as a result of good business have increased their revenue from 20,000 you have been filing or 20 million you have been filing now to be 200 million? That gap can necessitate an investigation by tax people. So the key thing is that from onset, he expected that you should do the right thing. But while people are not doing the right thing, the new tax act is now exposing them the more. So the key thing is that you need to apply and do the right thing. Then coming to aspect of VAT. VAT as a small company, the old act is saying the maximum level of your revenue that will warrant you to be paying VAT, collecting VAT and remitting VAT is at the level of 50 million and below. There are two things I want us to understand. There is a difference between VAT and company income tax. Like I said earlier, company income tax is being paid at the level at which you have determined what is your profit you pay. But VAT is at the level of your turnover that you pay. Then in terms of tax act that existed is 50 million in the old, and sorry, 25 million in the old, and now is 50 million in the new tax act. Then company income tax in the old is 50 million, but now is 100 million. For purpose of charging company income tax is 100 million, whereas for purpose of charging VAT, it is 50 million. So there's two things you need to get. Maybe I should share this screen so that you get what I'm trying to explain. I think I said it before. I believe you. Can you see my screen?
Yes, we can see your screen.
I just want to, I know I shared this before, but I want us to look at it again and understand what I'm trying to point out. If you can see my screen, this is what I'm saying. For purpose of VAT.
Sorry, your screen is not visible right now. If you can share and share again, sir.
Oh, okay. Can you see now?
Oh, yes.
Okay. For purpose of VAT, the law is saying 50 million for small businesses. Below 50 million. Standard and above is above 50 million. But for tax company tax purposes is 100 million. So I know people have been conflicting this discussion as though 100 million is both for VAT and also for company income tax. So the level at which it graduates or relates is 50 million for VAT. Anything below 50 million, you're exempted. Anything above 50 million, you have to collect VAT on their from your customers and remit. Then for your what they call it, for company income tax, you pay at when you exceed 100 million. That's when you pay tax. For anything below 100 million, you are not paying company income tax. Then the third question you ask, for somebody who is a large company, you are mandated to collect VAT and remit. You know, there are two kinds of VAT. There's what we call input VAT and output VAT. Input VAT is the VAT that is associated with your revenue. Businesses you render or product you sell to your customer and they gives you money. You have to collect VAT or 7.5% from that revenue you are generating and remit. Then the other aspect of which is output VAT is the VAT on your purchases. VAT on purchases, like people are into production, their raw materials. Their raw materials are purchases, is the input. It's something you use to generate the products that you now sell at the end point of it. So those input VAT, you also need to collect and remit 7.5%. So for you now who is doing business, they're a large company doing business and you are to expected to collect and remit 5%, and you engage in a company who have not gotten to that level of paying VAT, you should be able to, like most organizations these days, what they do what we call vendor assessment or customer assessment, KYC assessment, to the point that even before you engage them in business, you have gotten maybe the first 3 years of their financial statement. You can now assess the level at which they are belonging to. So that becomes your evidence upon which you decide to collect VAT for either vendor or your customers. But most specifically, once you are, for customers aspect, once you are above your category of collecting VAT, there's no this thing about it. Once you hit that revenue threshold and above it, even if tomorrow that you now fall below, maybe you have reached 100 million to this year, the next year now you now made a revenue of 90 million. For that first time you have reached that revenue threshold, it's now going forward prospectively. So you need to be collecting VAT and remitting prospectively. But for companies, at the point of engaging vendors or companies you are buying your raw materials or engaging in purchases, you should do your assessment and know why or know when or know the reason. If they are not in the bracket of you charging VAT for them, you should be able to establish that. One key thing is that while you charge VAT, input VAT and output VAT, when you are about to remit to the government, what we are remitting is the net of the input and output. Assuming you collected VAT on the input of 100,000 and your output VAT is about 70,000, what you are now remitting to the government is a difference of the two, which is the 30,000, not on the whole sum again. So that's the like a what we call it? That's like a network process that you need to do for you to be able to remit to that. So whenever you are engaging with any company that they claim they are not in the threshold of tax, they should prove that for you. But the key thing is that if you are not able to prove that and you decide to engage with them, if you refuse to collect from them or waive it for them, automatically you are the person to bear that VAT on their behalf. So what people do, because the onus is on the vendors also to file their tax returns at the end of the month. So if you collect for them and remit using their tax ID, it will reflect on their own portal too. And if you even collect, you give them and you did not, they do not remit, that will also reflect on their own portal when you are doing your own filing, because with this fiscalization process now, all those transactions are going to be visible in the eye of the tax officers, and that will now become the basis of the assessment and reassessment. I don't know whether I've cleared the questions you've just asked.
Yes, thank you. It's well understood right now. Thank you so much. Thank you.
Thank you.
All right. Thank you so much, Mr. Prince. I guess that will bring us to the close of today's program, today's webinar. Thank you so much, everybody, for joining us. And once again, please go in the chat box. We have shared the links to all of our programs: the Diploma in Information System, the Diploma in Entrepreneurship and Business Management, the Certified AI Business Analyst, and also the Certified AI Automation Specialist. We'll also be sharing all of this on WhatsApp and our Telegram channels. So thank you so much for joining us today. And also, we'll be having an introduction to our programs by next week. Details of this will be sent to the group, will be emailed and also messaged. Thank you so much, everybody, for joining us. Please endeavor to register for our programs. We'll see you next week again.